What's up, sons? This is Blind Rod with Son of a Tech once again. After we roll the sponsorship ad, there will be an interview with Daniel Keller, the CSO and co-founder of Flux. This is a really interesting interview, and I hope you enjoy it. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. And we're recording. I'll just record the intro afterwards. So, welcome everybody to a chat. This is with Daniel Keller. And if you'd like to introduce yourself, he's with Flux. Can you give us an idea of what you do for Flux, and then we'll go from there?
Hey man, thanks for having me on today. I really do appreciate it taking the time out to sit and talk with me. So I'm Daniel Keller. I'm the Chief Strategy Officer for Flux. I'm also the Chief Strategy Officer for Zelcore. Been with the project since its inception. I'm one of the co-founders. And yeah, I mean, people around the space, they kind of end up knowing me because I'm very vocal and I like to share exactly what I'm thinking. So I'm really glad that you had us on today, because we got an exciting show planned for everyone.
There's definitely a lot going on right now. So first things first, just to get it out of the way, Flux ran into some issues yesterday. A lot of the payouts from mining pools weren't going through. The initial report was from two miners that said there was a chain split. Is that exactly what happened, or can you give us more details on what happened there?
Well, I think what I want to do first is I want to explain to you all the fundamentals of Flux and why we're so unique. So anytime you say a chain split in the blockchain space, people panic a little bit, but it's less impactful for us because we really have two sides of the network. So I'm a guy that deals in statistics and facts. So what I like to do is share with you some of the positive things, because I watched your live stream earlier today, man, and we were down in the dumps. So I want to bring you back out of the dumps and make you feel good. Bitcoin's up a little bit, let's go into it. So Flux was born in 2018, really into the bear market. So we have developed right on through for the past 4 years. Some statistics specifically about Flux, and a lot of people don't know these statistics because we don't tend to brag about ourselves. We'd rather deal with development of our code, developing our process. So we are the 5th most used Bitcoin fork. We have more transactions on the chain than Raven and Zcash. In the past 30 days, we've done 1.3 million transactions on chain. We have 200, because earlier today you talked about GitHub commits, 243 GitHub commits this month on Flux alone, 300 plus on Zelcore. So you would talk about development, that's development. And these are real. Go check the GitHub out. Look at them. These aren't BS. These are real deal. We have over 4,000 deployed instances currently running today on Flux, included KDA, Presearch, Firo, Dot, Kusama, websites, dApps, you name it, 4,000 plus. We have 55 developers working on the project. About 25 of those developers are full-time. The other ones are part-time, half-time, and participating. We have over $7.5 million that's been allocated for development in our foundational resources fund. We've been very good stewards of our resources, especially for this project. Our goal from day one was to be the replacement for ETH. We wanted to be what the miners moved to, and we wanted to make sure we had the resources to do it. So give me another bull market and we'll have much more than 7.5 million, but you know what I'm talking about. So the net hash, which is part of what we're going to talk about here when we get to the issue that happened, is The net hash is actually up 4,552% in 6 months. We went from 80,000 to 3.3 million in our net hash, which is absolutely astronomical. Like, you can't even put into words what that looks like. And our price is up, and because I'm not a guy that talks about price, but we're still up 1,463% over the last 6 months. We started at 9.7 cents, and we're at $1.42, $1.50 as of today. And we went from about 525 on CoinMarketCap, and now we're up to about 135. So why do I tell you this ahead of time? Because I want to preface this by saying that we are a very in-your-face project. We're very involved with our community. We're very involved with our developers. And anytime we're building iterative tech, you're going to have challenges. So what happened exactly was we inherited a bug from a downstream push from Zcash, because essentially we're a fork of Zcash. So as we were spinning up these nodes and we placed this on testnet, we tested it, and looked good. We sent out the release, and we had an issue. Now, I want to explain a chain split, the way that it works for Flux, because we're not like ETC when there's a 51% attack or there's a chain split and people lose funds. We actually have 30 transactions, and that's why everybody, when you send your Flux to exchange, it takes about 2 hours to get there, because we have everybody set at around 40 transactions, because the chain would the nodes prevent it from going over 30 in terms of a reorg. So what happened was it split. A couple of the pools ended up going off of the correct chain, and we went into action immediately. We have a continuity plan that we have internally. So within 5 minutes after the split, we had already had 6 developers working on whatever it was. We had PR communication. We had people working to make sure that all the exchanges were protected, making sure that all the I's were dotted and the T's were crossed. So in the tech world, we know downtime isn't a good thing. But the one thing that I can tout, and one thing I am proud of, is we had a chain split, and our network didn't brick. We didn't go down. The nodes stayed up. A fair amount of the nodes stayed up. Of course, the ones that need the updates, they need to be updated. But we learned a lot from that. So what did we learn? We learned that we need to continue to keep pushing our testnet forward, and we need to continue to keep being very aggressive. And one of our roadmap plans is to have a really robust testnet so that we don't have this problem in the future. We do have a continuity plan in place that really worked well for us. We were able to jump on it very quickly and rectify the situation. The network never officially went down, which is pretty damn impressive considering what we were going through for the past 24 hours. I can tell you there's a couple projects very high up in the top 20 that have had degraded service and/or service issues for the past 5 days. Things happen. The nice thing about it is our dApps stayed online, our infrastructure stayed online, and we stress test exactly. We don't like to do things live, but hey, if you're not breaking it, it's not tech, and that's exactly what we did. So I'd love to sit here and tell everybody listening to this and tell you that this will never happen again, but I'm not going to do that, because this is reality. This is the tech that we're in. For all intents and purposes, we want to push the envelope. We're not going to wait for things to come to us. And the individuals running our nodes and our infrastructure are decentralized systems administrators. They understand they need to be quick to react, and they are. So that really, when it comes down to it, is the heart of decentralization. All these people that are out there jumping on top of it immediately to get us back on track. And so, we're going to do some things different next time, but it was, I hate to say it, we had a hell of a lot of fun working out the bugs as we went. It was really kind of an awesome thing to have see happen. I know it was a pain in the ass for the miners, and I apologize to you guys for that. But in reality, this is how we get from 4,000% to another 10,000% on top of that. We have to build, we have to iterate, we have to get ready for the influx. No pun intended.
And I did notice, I think it was around 1:30 Central Time, two miners did say that they were back up and running, payouts are running, and everything's functioning from the miners' perspective as far as that goes. And I understand that. My background is tech, cloud infrastructure in particular. Yep. So I've been there, and I know what you mean by the fun. There's those, like, it's kind of a bummer, but you've been up for 24 hours, but you got it fixed and it's up and running and everything's good to go. It always feels good after that. Plus there's the camaraderie factor that plays into that as well. So I understand from that perspective. Yeah, for sure.
That's good insight. And that, honestly, that's what happened is, we spent a better part of our Sunday, and it's all Sunday and then Sunday evening, working together as a team. I couldn't have been prouder of the guys. I mean, everybody stepped up, everybody came in. I didn't hear bitching and complaining. What I heard was people that were coming out of nowhere saying, how can I help? What can I do? Can I, update my node? How can I help you? And that right there in itself tells you a lot about the project, because, when you have the community members stepping up, wanting to help because we're a team that shows up on the bad days the same as we show up for good. I can come on here and tout, hey, we're up to $5 and X, Y, and Z, and everything's great with the world. I'm here the day after we got our asses kicked, and we learned a lot, and we're going to keep building on top of it.
Right. And I think that's going to be very important, especially if we were talking about a threat of a bear market right now within the cryptocurrency industry. I think you're familiar. I've started the channel in the cryptocurrency direction probably back in like 2016. So this would be the second cycle that I've had experience with. I was talking about that this morning. A lot of the coins, a lot of the altcoins disappear in a bear market, and they do not come back for the next bull run.
Yep.
And for whatever reason, some of those issues are that, they're built as a business as opposed to being built, I guess, in the way that Bitcoin is, which is where you don't have like a face to the project or something along those lines. And how are you guys structured from that standpoint? Board members and so on? Is it a corporation? What kind of, like, is there threat of public funding or anything like that?
Nope.
Okay.
No, when we created Flux, it was for the people, by the people. That was our goal. That's been our motto all along. We've said that from the beginning. We wanted to put the power of decentralized compute back in the hands of the people. That's us, the miners and also the node operators, the people participating in the ecosystem. We structured it so that Flux belongs to the people. The core team themselves we're locked up for a very long time. We'll be on the project. We have two different companies. One is the actual Flux that helps to, which is a community-based asset. It's Bitcoin for all intents and purposes. And then we have Zelcore, which looks a little bit like Lightning Labs. So that's where the core guys sit and they develop on that side of the fence as well. But I will tell you this, there is no VC funds coming to Flux. We have made this very clear. We were a fair mine, fair launch, miners based, proof of work. The devs took a 0.4% of the total supply and locked them in nodes. And that's we've had to run nodes to keep them, up and structuring as we went through. So, our goal was to be as transparent with our community as humanly possible, because that's the people that are going to help us scale this and iterate it to the next level. And, I am not a fan of these VC projects. I'm not a fan of proof of stake. I believe in proof of work, and all the naysayers that are coming after proof of work right now are just, all those comments are ill-gotten. They just don't understand how the power of decentralization and proof of work. And I think it, go ahead.
That's a great segue, because if we're talking about proof of stake, I think the biggest concern, at least from a majority of people on the infrastructure side, is that those nodes that are going to be running, the staking and so on, are traditionally going to be put on traditional server infrastructure, cloud infrastructure, the likes of Microsoft, Google, and Amazon, AWS or Azure. And that does pose some sort of threat to centralization, as we saw with things like Parler getting shut down. Amazon, if they don't like it, just turns it off. And so there is, I think I tweeted it yesterday, which was kind of funny. As I look at Flux as a project, I said the best chance for proof of stake coins to be truly decentralized is by utilizing a proof of work project. And that I was referring to Flux at the time.
Yep.
But the irony there is not lost on me. And I thought that was a little funny. One of the things I wanted to use our time to do today was kind of pick your brain on specifically Web3, not just from a top-down perspective, but maybe more from a technical perspective, because one of the things that I was curious about was how many of the nodes currently are run on, say, like a cloud solution like Azure or AWS, and how many of them are run on bare metal, or I know there's options like the NVIDIA Jetson boards. I think I saw Raspberry Pi is in the works as well. Do you have numbers on that as far as data?
You can always find that out by going to our dashboard. It's a dash.
Okay.
If you check out our dashboard, it gives you the breakdown. The nice thing about Flux and the way that we set it up is we allowed individuals to participate at whatever level they wanted to. So someone like me that wants to run physical infrastructure, I can run bare metal and I can set those up. I have a data center that runs my infrastructure, and I like it that way. But we also wanted to open it up to anyone really to be able to participate in the ecosystem. And that's why we really focused on the ARM products. So we brought on the Jetson, we brought on the Raspberry Pi. We have about 2,600 nodes, give or take. I would say a good over half of that is probably on VPS and it can be spread all over the place. Contabo is a big one that people choose to run it on. One of the challenges that we have moving forward, and one of the reasons why we really want to push our Project Titan, is to allow people to run that infrastructure with a lower barrier of entry. So right now, to get into a node, it's pretty damn salty. It's expensive, and ultimately, what we're doing is bringing that down to a palatable level where if I have a student that's going to college and he wants to run a Raspberry Pi or a Jetson and participate with the network, he'll spend 5 Flux to do it. He'll be able to get it up running. He'll be able to get rewards. The Jetsons and the Pis in the new Project Titan, they will be off-chain rewards. So we'll really have 3 different tiers to our infrastructure. So this is a long way for me to answer your question, but something I think from a technical standpoint would appreciate this. We've addressed this in 3 different ways. We've addressed it by being able to allow the end users have a low barrier of entry to participate in the network, a la Jetson and Raspberry Pi. We have our enterprise-based infrastructure. Those requirements come down, those nodes expand. We expect over 10,000 nodes that'll be online, and then we'll continue to push and incentivize individuals for bare metal. So they're just because you're running a node and you're allocated a particular portion of the block reward doesn't mean we won't identify opportunities to incentivize people who get creative with their infrastructure. So, and that's one of the things the foundation has really set out to do. And they've allocated resources to be able to incentivize those individuals. So if you stand up 3 servers and they're bare metal and we can prove they're bare metal and you're able to participate, you could be rewarded at a higher level than somebody that's placing this on a VPS. So we want to continue to keep that enterprise push in decentralization. And the third one, which really we have to address the 10,000 pound gorilla in the room, or elephant, or whatever you want to say. And that is legacy-based infrastructure. We would be remiss not to want to figure out a way to work with enterprise-based legacy infrastructure to have this kind of cool symbiotic relationship where they're playing by our rules in the Web3 world, but they're able to participate. And I will tell you, one of the very first ventures into that was us moving into the NVIDIA Inception program. We want to work on proof of use of work and developing that out. But we also want to work with large data providers as well. So, somebody said the other day, could you see AWS working with you? No, that's not what we're talking about. What we're talking about is the ability to have somebody who is in, and you know how this goes. You have somebody who's a high player. They have a lot of infrastructure. They love the idea of Web3 and they want to experiment with Web3, but they don't necessarily want to jump the whole way in. So they want to run this almost redundant, setup where they have a little bit of infrastructure in legacy Web 2, and then a little bit of infrastructure in Web 3. And then I see that transitioning as it goes. So,
right. Well, it was always the same with moving from like bare metal servers or whatever to the cloud, right?
yep,
Like
100%.
it was typically like usually put in parts from an architectural standpoint. You usually would look at top down what pieces need to move, what pieces could move now, and make sure that they function in between each other. I think an easy example would be when everybody started moving to like Office 365 and you would have hybrid environments.
God.
I worked with those for ages. And those hybrid environments could get a little tricky, but I understand like it's important to have that. I guess from your perspective now for Flux, it would be a hybrid between Web 2 and Web 3.
Yes.
One of the things that I guess from a technical perspective, maybe I'm not fully understanding is how, so I did deploy like the Minecraft server. A lot of like that is just starting to try to understand like the dashboard and how it works. For the most part, it's very similar to like a VPS, maybe not as robust from a customization standpoint at this point. I understand that would be coming later on.
Yeah.
Can you explain to me like the workflow there? Because I'm not sure I really get it. And I guess specifically like, so there's the nodes, right? Are the nodes the portion that's running that processing power that you are essentially renting out when you rent out from the dashboard?
Yes. So there's two sides to the network. There's our proof of work side, which is our transaction validation side. They also, we use our D2FA, which is our decentralized two-factor authentication. Zell ID, which is our self-sovereign ID piece that ties together with the node infrastructure.
Right.
So I always tell everybody we are a layer 2 that happens to have a layer 1 infrastructure. So the layer 1, the proof of work based infrastructure is really what makes us blockchain by birth. And then you have the Web 2 that does the computational resources.
Right.
The individuals that supply those nodes, they lock up their Flux, they deploy their infrastructure. We're rewarding them with Flux from the block reward from the proof of work side to allow them to participate in the network. And instead of paying AWS, it goes to our infrastructure. It goes to our operators. So, the standard conventional tech stack now is I have a need, I deploy on a VPS, I manage on a VPS.
Right.
The way that, AWS or whoever the third party is, that they're right here. They're the toll keepers. They're the gatekeepers, right? And they're standing up and running the infrastructure. They're accountable to the infrastructure. What we did is we bypassed that model, that standard tech stack, and we went more in a lattice direction. And we moved to peer-to-peer. We went to the individuals. We went to decentralization. So when I say that they're decentralized systems administrators, they absolutely are. It is not easy running a node on our network. It is not easy participating on our network. You have to be that, and you're rewarded very well for that participation. So we have that node reward that gets distributed. So we have our proof of work side that gets part of the block 50-50. And then the nodes get 50, and then they're tiered out from there. But the bigger piece of that is if you run additional infrastructure on those nodes. So for instance, on mine, I run KDA, I run Presearch, and I run Firo. I'm not only making Flux, but I'm also making KDA, I'm also making Firo, and I'm also making Pre. So it allows you as a node operator to have additional means to generate revenue and income, and you're creating a business model. By running a node, you're ultimately creating your own business model. And you're providing computational resources to the network. So, it really is, it works in this hybrid world where the blockchain is really validating, the node network is providing the comp resources, and they're working together in harmony most of the time.
Right. Now, obviously, I don't expect like huge enterprise to move over right now, but I think like a question like once we get over towards that is going to be, of course, redundancy and so on. And I'm assuming that is directly related to the amount of nodes because that is what's providing the computational power, correct?
Yep.
Could you give me an idea of how that failover system works? Like if we're talking about failing over from one node to another, if one goes down, that sort of thing?
Well, we lost well north of 1,000 nodes yesterday during our issue, and our network didn't go down. So the load, our app stayed online. We kept running. The failover is kind of built into it. We have, several pieces, the Flux domain manager, we have the load balancing backend. We took conventional infrastructure, conventional AWS style infrastructure, and we brought that into a decentralized world. Really, that's what we developed Flux OS on. So, I'm going to disagree with you. I think enterprise will come, but I think it'll look exactly like we talked about earlier. I think it's going to be this hybrid split between, Web 3 and Web 2. I can tell you right now, we're already talking to large players in the space who are, interested in, expanding into Web 3. Hey, man, the writing's on the wall. It works. It works. And, are we going to iterate? Yes. Are we going to have challenges and problems? Yes. We're a new, for all intensive purposes, we're building stuff that's never been built before. So, maybe, as I see these enterprise infrastructures come into the space working with us, there could be load balancing between the two as they continue to keep developing outward. And ultimately, the end user will be able to choose whether they want to be all in Web 3 or all in Web 2, or maybe I want to be in both. So I think that's the best of both worlds for everyone.
Yeah, and I think when I was saying I meant right now as it currently sits, but I understand that eventually the goal is to have enterprise move over.
Oh, I got you.
I would also wonder how much processing power you would need for that, for say whatever project it may be, and how much the network needs to grow, because a lot of this is going to be directly related to how much computational power is available on the network, correct?
Yeah, well, the badass thing is that we set this up so that we can really kind of scale on demand. So the halvening, we've 4 years till our first halvening. Our first halvening is coming up in April. And, we're estimating 10,000 plus nodes on the main chain. And then we're estimating probably another between 5,000 and 6,000 nodes that will come online with Jetsons and Pies almost immediately.
Okay.
So, you're looking at, I think over the next year and a half, 20,000 plus nodes running all over the world. And that's some legitimate ass horsepower. I don't care who you are or what you're doing. That's a real deal. So, we had insight into the architecture behind how AWS and Microsoft and some of these other deployed their cloud infrastructure. And that really went into how we planned this out. And we had a very interesting situation because we could learn from the issues that they had. They had already had this first movers disadvantage, not advantage. They were already to the point where they couldn't necessarily grasp how to decentralize what they were doing. So we grabbed that and we built it from the ground up. And I think that's really what Flux is all about. Cool.
So let's move into a little bit of the proof of work side. Specifically, I know a lot of people have questions surrounding this proof of useful work. I think this is exciting to a lot of the GPU miners. It's a focus of the channel, right? So proof of useful work, from my understanding as a whole, is going to basically allow, useful computational power to be basically pulled over from the mining side of things, allowing basically the power of the GPUs to be utilized for other purposes such as AI or whatever it may be. Could you give us an idea of I suppose what the timeline on that may be, if I am misguided and messed up on the definition there, and then kind of give us the overview?
No, you hit it right on the money. And if I had to say, what am I most excited about with this project, it's proof of useful work, because we identified really early on, I went to the guys and I said, look, one of Satoshi Nakamoto's, greatest quandaries was, where does all these resources go? So if these are just transactional validators, how does that work? And that started to form our thought process behind being ASIC resistant. We didn't want to have that. We wanted to make sure it was GPU based, and we wanted to make sure that it was decentralized. And if, somebody asked me the other day, they said, what would you do if an ASIC came out? We'd fork immediately.
Well, you would have to, if the plan is to provide a portion of the infrastructure as GPUs, then you can't have an ASIC on.
Yeah. Well, the nice thing about one of the things that we're looking at with proof of useful work is what we're doing is taking part of the computational resources, allowing the graphics card to stay on the network to continue transaction validation, and then augment part of that processing power off to be rented out in the marketplace or delivered to somebody on demand so that they could use that. So one of the examples I give, and people kind of get it real quick, is we know these deep fakes that go around. You see these deep fakes. Well, it takes a ton of computational resources to render one of these deep fakes. If you go on YouTube, check it out. Rendering the deep fakes takes a ton. But do you know what takes even more? Proving that it's a deep fake. Showing, being able to immediately and very quickly look at something, analyze it, be able to render and process that GPU power to be able to prove that it's a deep fake. So we should be much faster with this side of it than what it is on this side of it. So, our goal is to provide useful work. We've already done proof of useful work on the node side. We deployed folding at home for mapping COVID-19 proteins. If you want to run a folding node right now, you can go on, you can download it, you can launch the app, and you can begin to fold right on your node right now. So what we're going to try to do with the proof of useful work on the GPU side is to be able to continue to reward those miners that are participating in the network and have them quasi leave the network, but still being transactional validators and be deployed where they're needed. So it's a lofty goal. It's one that we're taking very seriously. We're doing lots of research on it. We have our test net up. We're beginning to start probing around. I think you'll probably see the first iteration of our white paper, because we're not going to use the MIT based white paper, because we came up with a different way to do it. So we built a better mousetrap. I always tell everybody this, the individuals that put the first concept, and if you're curious about it, just Google proof of useful work white paper and you read about what they put in place to begin. It was analytical individuals who were sitting in a room and they were trying to figure out how to make this work. What made it great was we were able to grab analytical individuals, and we were also able to grab miners and people who have provide the infrastructure. And then all of a sudden we started seeing this weird symbiotic relationship between the two. So we have Blonde Frogs, who was one of the original coders on Ravencoin, who's on our project. He's leading that with a team of about 6 to 7 different people right now, and we're going to continue to keep grinding. So I think you'll see white paper, and my goal is to have this on testnet by the end of the year. It's a labor of love, because we're not looking. I'm being straight up honest with you when I tell you this. We are not looking to build this for Flux. We are looking to build this for the crypto community. We expect other projects who are already on different algorithms to be able to move to proof of use work and participate in our network as well as together. And really, honestly, that's how we win, because we get out of this different, my coin's better than your coin, my project's better than your coin. Look, if we can get to a point where we're all working together on something, even if you are doing different things, then we're all working for a common goal. So that's our goal. Is we have no intention to keep this as a closed code base. We're going to give it to whoever wants it, and we're going to hope like hell a lot of projects adopt it.
Well, I believe you, because if I look at a lot of projects, I do see that your interoperability, which I can never pronounce, but is far ahead of pretty much any other projects out right now. I think you have an example is the parallel assets for the GPU miners. Understanding parallel assets is going to be paramount, because you need to understand that you do get those additional assets paid out. So making sure the pool works on that. But a part of that, my understanding of that, and I'm wondering what your thoughts are on it, is basically that helps influence the network to basically participate in other networks to a certain extent, right?
Absolutely. Yeah, and what it did was it really pushed Flux into the forefront as a leader in DeFi, because we were able, the whole idea, the whole concept between this interchain operability, these parallel assets, was to do 2 forms of scaling. One is our soft scaling, which is the parallel assets, and then second was the halvening, which we talked about earlier. So most of the individuals who are already mining the project and or already running nodes, if we provide them with additional parallel assets, they're going to do one of 2 things. They're going to provide liquidity on those particular chains. So in Binance Smart Chain, KDA, and Cadex, Solana and the Solana network, so on and so forth. Mm-hmm. Ethereum and some staking in Ethereum with Pancake and all those other ones. We were the #1 leader, and think about this. Okay, because you've seen a lot of shit coins come off of the Binance Smart Chain. we were leading the pack and still are leading the pack as like one of the number one projects on their platform. And that's honestly how we ended up getting listed on Binance, is because we deployed, we provided liquidity immediately. The individuals got on top of it, and the next thing you know, here we are. And I think, and then the second thing that they can do, so they can provide liquidity, they can participate in DeFi, but the second thing is even bigger, and that is the majority of the people that aren't going to participate in these ecosystems, they're going to bring them back to main chain, and they're going to stand up more infrastructure. So Dan, who runs nodes, and I like running nodes, my parallel assets are going to make the jump back to main chain, and they're going to go up into more infrastructure. So it allowed us to soft scale, and we added thousands of nodes because of it. So, I think especially with the requirements being lowered, but the parallel assets continuing to grow, and we're going to announce another parallel asset this month. So yeah, I mean, it's the best of both worlds, and it really kind of spans that, and it makes. And I've said it from day one, interchain operability is the holy grail of blockchain. When you can participate in different networks and have them working together for the betterment of all, you win.
Right. I mean, that's super important. So I agree with you there. Now, one of the things for GPU miners is if we take a look at a majority of the hash power that's currently on Ethereum, a lot of it's coming from older GPUs, namely Polaris GPUs, RX 580s and 480s. They don't currently run that well on Flux. And then I know, obviously, the move to proof of useful work means that there would be no current algorithm changes. But do you think that you guys may look at that from an infrastructure standpoint to help miners move off of that for proof of useful work?
Yeah, I think it's going to be interesting to see how it all transpires. I think in the end, our algorithm does favor Team Green. It just does. We had to build it that way for a couple different reasons, and some of the older legacy based cards that are out there running, we're not looking to change the current algo, but what we are looking to do is equalize that in proof of useful work. So, my theory about it is this: there is no other project out there in the space that's doing what Flux is doing. So being able to take your old cards and mine at a delayed return on investment. I mean, heck, I got 3 gig cards running, man. I'm telling you, it's like, these things are ancient, but it's better than not mining, not putting your resources and computational power behind anything, stripping them down and selling them and hoping like hell that you make some money on them. So, right. Our goal is in the next iteration, proof of useful work will level that playing field. So whether you're team red, team green, we want as many cards to be able to participate in that network as humanly possible. So, I want to address that again to the folks that are miners and listening to this. We want to make sure as many people that can participate in this as possible participate in this. We aren't going to make this a walled kingdom. We want to make sure that we have people, because ultimately we're going to be able to utilize your computational resources. So, one RX 580 running doesn't amount to a whole bunch, but if you have thousands of them running, well, now that's something to really behold. So yeah, we're really interested in leveling that playing field.
All right, so then of course we have the big, I guess, elephant in the room for proof of work miners, especially GPU miners, and that's going to be, do you think the network could handle an influx of GPU mining if ETH moved to proof of stake?
So what was the number that I gave you earlier? What we have 4,000%. Like anything else, it's an iterative process. We have to load test our network, and when we learn as we grow. So we identified immediately we're going to have more pools. The pools are going to have to be more communicative. We're going to have to continue to keep developing out. They're going to have redundant infrastructure. So Ethereum has a head start, much more of a head start on the proof of work side of the world, right? They have well-developed pools. They have well-developed infrastructure on the mining side, not necessarily on the actual smart contract side, but don't get me started on that. So the answer to your question is we'll be ready, and we have every intention to be ready, and we're putting the pieces in play because we are going to take that position. There isn't a debate. There's nobody else that's going to come close to us. And if they do, I'd sit down and talk to them about it. And I'd want them to share why they're going to beat us out, because in the end, we have planned for 4 years for what comes up in, what is it, April, May? I don't know. It could be June, July, August. I don't know. In June, we want to be the player in the space. We want to take that, because we respect our community. We respect our miners, and we want them to be part of what we're doing as a project and as a goal. I mean, it's really it's a lot of fun to do what we do. And, I think Ethereum did a disservice by casting aside the individuals who have supported them from the beginning. I was one of those guys that mined ETH, and it really, it stings, in a lot of different ways. So
there's a complete disregard for people that provide infrastructure, for sure. Yep. And I think that's across the entire industry. That's not just cryptocurrency either. Yep. in a lot of cases. So it's good to hear that. I kind of wanted to hear what you thought about it. When you look at it from the perspective of miner, especially if you're into GPU mining, which I've been touting for a long time, it's like, okay, this looks like it's going to get real interesting real quick, especially because they are going to hit it right as we hit potentially this bear market here, which should make things extra interesting from their perspective. I don't know how this is going to work out.
Yeah, and I want to share something with you, because I listened to your live stream earlier, and I want to just give you some insight that I have specifically around the bear market. So 2 things. The first thing is, I think you're going to hear a lot of false prophets come out and start to say that, proof of work is old, it doesn't work right. I mean, it uses a lot of energy, yada, yada, yada. Bullshit. They are pushing an agenda. They're pushing people toward proof of stake. And I'm telling you, they do not like decentralization. And that's what we're here for. We are not here to play games. So you're going to hear, I can tell you, I've heard big influencers in the space already come out and say, we got to get away from proof of work because it's, wasteful and energy. It's like, do you even know what you're talking about? Because clearly people follow you and they listen to what you have to say, and you're leading them astray. Doesn't work like that.
And in the case, I won't mention any names, but I will say, as far as the point of trying to move Bitcoin itself to proof of stake, the miners vote. It would have to be consensus of the miners, and the amount of infrastructure that's been invested in, it doesn't make any sense that would move proof of stake anytime soon.
Well, what you'll see in a bear market is you'll see people say things that they don't necessarily believe in, because they believe that they're doing something. So if we do something, if this is a problem and somebody says it's a problem, we should do something.
Right.
Doing nothing sometimes is the hardest thing to do, right? Stay the course, keep doing what you're doing.
Right.
And the other thing I wanted to share with you is, I do believe we have, I don't think we're in a bear market. I think we are in a corrective market. And I will tell you this, the infrastructure delivery side of this space. So the assets have suffered, but the building of the infrastructure, development of the back end is in full bull market.
Right.
It's in full bull market. We're not seeing that in the price of the asset yet, but it's still there. Like you wouldn't believe it. I mean, it's the buzz going on about building the next iteration of everything it's tremendous. And that wasn't there in 2018.
Yeah, I agree with you. I think so. Yeah, I agree with you for sure. I think there's a lot different this time than 2018. I think, though, to make sure that people don't end up not being able to pay their power bill, it's good to be cautious and make sure that we're pulling out some to cover the costs of the farms and so on, and be realistic from that standpoint. I would assume at least through tax season, we would go down a little bit more as far as that asset value, as you refer to. But I do agree with you from the infrastructure standpoint. It's in full force. I'm here in Texas. I'm getting called all the time from different people moving in or whatever. So
massive mining facility just opened up down there. Massive,
Yep.
So, in the end, I think that I agree with you 100%. I think the market needs, for the forest to grow, you have to burn the underbrush. And there are way too many projects, even sitting in the top 100, that have very little use case. You look at their GitHub and it's about enough to make you sick. The last commit was from 2018. I like that. You said that earlier. This is real deal. And as people become more wise to to blockchain as a space, they start to figure these things out. They start to go out and look at GitHubs. They start to go out and look at development teams. They look at AMAs. They look at their website, and they do research. People become more wise. Why? Because they got burned. They got burned and they learned, right? So, expensive lessons we charge in this space, but in reality, that's what it is.
Nope, I got you. Well, thanks for coming on today. Definitely appreciate your insight. Maybe have you on again some other time once we get closer to maybe proof of useful work, or when we move on to the Titan stuff as far as the nodes go. Just hit me up. We'll have you on and we'll go over what the timelines for all those are. Did you have a timeline on the Titan stuff?
So Titan, the first iteration of Titan is going to be in April as well. So it's directly after the halvening of the nodes, we will deploy our first iteration of Titan. So, we're super excited to get that out and get that in the hands of people to start standing up nodes. So, and I just want to thank you for having us on. Hey man, we show up on the bad days and the good days, and that's the thing that keeps us going in the end. So I appreciate all the attention that you have brought to the project by actually going out and actually deploying something and giving feedback. We need feedback, man. If you're out there and you're listening to this and you're a developer, come deploy with us, come work with us. And because we want your input, we want you to be able to help out on the network. So, and I do appreciate that, man.
Yeah, for sure. Are you guys going to work on some more documentation as far as for the home dashboard and so on? It feels like that's a little bit behind. But also, I like my handheld when I'm first doing things, so maybe I'm a little different there. Oh, I lost you.
Yeah, I came back.
Okay.
That's it. Okay. It's a little thin, and we know it's a little thin, but we're definitely going to get on top of it. And we want to make it as easy as pie to deploy on this network. I mean, that's the ultimate goal.
Right. Perfect. Any closing words?
Nope. I just want to thank the community. Thank everybody for dealing with us yesterday as we went through it. Like I said, I'd love to tell you it's never going to happen again, but if it's tech, we're going to be breaking it. So that's how it goes. But thank you guys. Thank you for having me on, and thank everybody for the support.
Perfect. Cool. I'm going to stop the recording now. If you enjoyed this content, be sure to hit the subscribe button for more, or check out this playlist for more crypto content related topics.